If you have $25 in your Canadian bank account right now, this is what you should be doing to get rich. I know it sounds a bit weird for someone to be doing a video telling you how you can get rich with just $25 in your bank account, but I promise you, this is not a clickbait. This is not one of those videos where we're gonna give you superstitious ways of getting rich that doesn't really benefit anybody or bring you around in circles and not actually get to the point, right? So I'm gonna be sharing with you guys how you can use or start with just $25 and set up yourself for future success and become financially free in Canada. If you guys are new here, my name is Dems. I'm a Jamaican who migrated to Canada back in 2019. I came here to this country. So noisy outside, guys. I came here to this country with my family in pursuit of a better life, in hopes of giving my kids a better future, right? Many immigrants share a similar view, a similar vision. My background is in finance. I did close to a decade working in the banking and finance sector. My last role being a senior financial advisor in one of the top 5 banks here in Canada, right? I've made quite a few financial mistakes myself, and it is my hope that if you are seeing this video, you will not be making the same mistakes that I have done. Okay. That being said, I'm walking to the gym right now, and I thought it's the perfect time to share this with you. Now, $25 in your bank account. What should you be doing with that $25 in order to set up yourself for future success? Now, the best person to take care of your future self is your younger self. It starts with your mindset shift. Shift from expecting instant gratification to expecting delayed gratification. There's no get rich quick scheme. None. And sad to tell you guys, but buying a lottery ticket is a waste of money. We all have that goal or hope of winning the lottery, and we even start spending the money before we win. But it's better you open a rubbish bin and throw that money in, because quite frankly, you are not gonna be the lucky person to win the lottery. You guys probably say, no, Dems, what are you talking about? I've invested so much in lottery, and it's just a matter of time before I win. Really? Now, with that mindset shift of expecting delayed gratification, it's gonna be the key to success to invest in that $25 that's in your bank account right now. You have quite a few accounts that you can invest in. Tax-free savings account, TFSA, registered retirement savings plan, RRSP, or even a non-registered account. These are the 3 main accounts I'm gonna suggest that you guys open to start investing. Now, when you open a tax-free savings account, as the name suggests, any amount of money that you invest in that account, interest generated on it is non-taxable. The thing is though, you have a contribution limit every year. Now, whether you're an immigrant or you are have been in Canada all your life, you need a tax-free savings account. And you need to be aiming to max or get as close as possible to your contribution limit every year, so that you can maximize your returns, right? Now, tax-free savings account, you don't get that tax deduction where you get that tax write-off at the end of the year, but you benefit by not paying tax and the interest you generate within the tax-free savings account. So after you open the tax-free savings account, you're gonna talk to an advisor and start investing in mutual funds. Now, you can do this one of 2 ways. You can do it with a financial institution, or you can do it yourself through a self-directed investing platform. I won't make a recommendation because this video is not sponsored. And do it yourself and buy your own stocks and so forth, so on. Registered retirement savings plan. The thing is, as it suggests, it's a retirement plan. But any contribution you make within this plan comes off your total annual income, so you end up paying less taxes at the end of the year, providing you don't take the money, because if you take the money, you're gonna have to pay tax on it. But the purpose is for retirement, and you can also invest in mutual funds through a financial institution or through self-directing investing. The thing is with RRSP, your contribution limit is 15% of your previous year's total income. That's your maximum total contribution limit for the following year. So you do have a limit. So if you are saving enough in your tax-free savings account and you have maxed your limit and you have also maxed your tax-free savings account limit, the other option is to open a non-registered account. The non-registered account allow you to invest in mutual funds and other securities just the same, whether through a financial institution or self-directed investing, just the same. But there's no contribution limit and there's no real tax benefit, in the sense that whatever interest you generate within this account, you are taxed and you don't get the tax deduction similar to the RRSP. The non-registered account can also be a joint account. So if you and your spouse want to invest together, you guys can open a non-registered account and start investing together. Tax-free savings account and registered retirement savings plan are individual accounts. It can't be joint. Now I wanted to take a moment to advise you guys about the different types of accounts that you can invest in, because that makes a big difference as to where you put your money. It all comes down back to the goal of why you are investing. If you're investing for your retirement, then RRSP is the best option. If you're investing for a short to medium term goal, probably a tax-free savings account is the best option. And if you max out your contribution limit, you always have the non-registered account to piggyback on. Right? Those are the three ones I'm gonna advise you guys on. But there's more accounts, but let's not get into that. Now, how do you start with $25? Most financial institutions have what is called a pre-authorized contribution system. This is where you sign a PAC form and you decide how much money comes out your checking account on a systematic basis. So it can be every week, every month, every 2 weeks, whatever you can afford. The minimum amount is $25. This amount comes out your pay. Like for example, if you get paid every Friday, you can set up your pre-authorized payment contribution. Hey. Hey, pretty friendly. You can set up your pre-authorized contribution to start every Friday as per your pay schedule. Now that amount comes out your account before you even see the full amount that you get paid. And let's be honest, most persons don't know what they do with $25 every week or every month or every 2 weeks or whatever. You can start investing in mutual funds either by yourself through a self-directing platform or through a financial institution, a minimum of $25. Now, the reason why I mentioned delayed gratification is because it's the consistency of you investing that $25 that's gonna make you financially free in the future. That $25 that you invest every 2 weeks or every week, when you put it in mutual funds, depending on your risk tolerance, your interest that you generate on that money is compounded. And let's be honest, compound interest is the eighth wonder of the world. So that money then becomes compounded. So you're starting with as little as $25, and then that $25 start working for you immediately, right? The thing with mutual funds and similar funds is that it doesn't matter how small you start, it goes into a bigger pool. It's almost pool investing. So your money goes into the big pool that millions of people put millions in. So you get a piece of the pie just the same. right? So with your little $25, you can start. Now, a lot of immigrants don't do this. A lot of immigrants save in their checking account, which is not in keeping with inflation. You want to make sure that when you're investing your money, you're investing above inflation. And the only way to invest above inflation is to put your money in variables that has the potential of generating more interest than the inflation rate, right? Checking account, having your money there or into a regular daily savings account, your money is not really working for you because you're investing below inflation. So after 5 years, your $20,000 is only gonna worth $18,000. But if you're investing above inflation, your $20,000 has the potential of being $40,000, $30,000, $25,000, or even if it remains the same $20,000, you have still won, right? So as little as $25, you can start investing. And the thing is, guys, you can open all of these accounts even as an immigrant, even as a temporary resident. You can open a tax-free savings account the first day you land in Canada. Your RRSP is a little bit different because you need to file your tax before you can open that one. Non-registered account, you can start it as soon as you land in Canada as well. All of these things are things that's within your control. But it starts with a mindset shift. Stop seeking instant gratification and be okay with delayed gratification. So that's my financial advice for you guys today. If you like this video, please let me know down in the comment section. Apologies for the train in the background. If you want to see more, let me know as usual. Smash a like, subscribe. See you guys in the next video.